What's up, crypto fam? It's Phantom taking another look at the market. We got hit hard today. There was some news that dropped from the Bank of England that wrecked the Dow, wrecked the S&P, wrecked crypto. It put a lot of fear into the market, which isn't always a bad thing. Like I said, as long as I'm just pushing that we don't close below this weekly trend line. I keep seeing a lot on Twitter that this is the start of the recession and that there's a housing bubble coming. And I just, in my history at least, when most people are calling that shot, we're not there. It's usually when people are making that shot, we tend to get another pump out of it because most of the market is wrong. There's very big players that know how to manipulate the people with these narratives and news stories. So when they come out with these talks of inflation's right around the corner, housing market bubbles about to pop, likely we're a ways away from that. I do think it will come, and I do think it will hit us very hard. That said, I don't think it's going to be in the short term that people are thinking. I don't think it's right around the corner. I think it's going to be at the end of this year, beginning of next year, that we'll really start to see that effect. And I think that fear plays into the capitulation that a lot of people were feeling just before you hit another bull cycle. So, speaking of that, we'll take a look at the fear and greed index. We're at 22, so we're right back into extreme fear territory. I have the news article of the market reacting to the Bank of England. The market value of the British pound fell by 2% today, reaching a low of $1.24 against the US dollar. Also, today, the Bank of England raised interest rates and predicted a 10% inflation by the end of the year. Though the bank said that does not mark a recession, it says the sharp economic slowdown could lead to one. Today, the British pound fell in value as the Bank of England increased its interest rates and warned of inflation. The drop took place amid broader decline in stocks and cryptocurrencies alike. So they obviously came out, scared the bejeebies out of everybody, and the market reacted very strongly. Many of the markets reacted in a similar fashion. So I think this was I don't think this was really as anticipated as the Fed coming out and speaking about the 50 basis points that they're increasing, especially because in the US they're kicking the can like inflation's not a thing or that recession won't happen, that the economy is too strong. They're just trying to curb any potential inflation. I think people are going to start holding on to their money a lot tighter. And I think that we are going to be due for a recession and housing bubble pop. I just think it's going to be later than a lot of the market predicts. That said, I do have another bearish, semi bullish article. Senator Warren obviously hates cryptocurrency. She comes out all the time against it, about its energy effects, mostly just uneducated, unwarranted attacks at cryptocurrency for mainly a lack of understanding, because much of what she says can be invalidated or argued against pretty easily by reading, the original white paper that Satoshi came out with. Elizabeth Warren is calling Fidelity Investments to explain the decision to allow its investors to add Bitcoin to their 401k retirement accounts. What happened? Warren and Senator Tina Smith sent a letter to Fidelity CEO Abigail Johnson expressing concern about the company's new digital asset account, which allows investors to have a portion of their retirement savings allocated to Bitcoin. So I covered this on the stream a week or two ago when Fidelity came out about this. They're allowing people to put 5% of their retirement into Bitcoin. 5%, is obviously, it can be a large deal, but it's up to people, right? Like, they come out all the time against Elon Musk, and even though he's paying a absolute boatload in taxes this year, he has had years where he's paid zero in taxes because he basically gets by taking out loans of his of the stocks that he owns in Tesla. So they obviously continue to keep on firing on at these people, but these are the lawmakers, right? They have the ability to create the change and to fix the problems, but instead they yell at the top of the lungs and they create themselves soapboxes to push their opinion and narrative because it gets them speaking engagements and it gives them the ability to be on news networks, all of which are revenue generating experiences for them. So they're not doing this out of the kindness of their hearts. They're not doing this for the better of the people. They're doing this because every time they do, they put money in their pocket. And the sooner people see that, the better off we're going to be. I strongly suggest that they do their research on cryptocurrency and see some of the fundamental gains that are to be had with it. The United States should be leading in innovation, not fearful of it. They need to get on board. So I'll get off my soapbox. I'm not getting paid for, um, to sit on my soapbox and speak, but I think it's important to note that every time they come out with this and they get their speaking engagement, they're putting a lot of money in their pocket. Granted, they do pay taxes. They don't pay for health care. Health care is outrageous. I think a lot of people would pay an increase in taxes to not have to pay for health care. What it costs to cover a family today is it's embarrassing. And on top of that, you pay so much in health care and you still pay for doctor's visits. You still pay for any type of specialist visit. You pay and then you pay. So that said, I think cryptocurrency solves a lot of problems. And yeah, it's a high risk asset. It's very volatile at the moment. But the government needs to stop telling individuals how to invest their money. Like there's enough problems to solve in the laws and the broken system that we call politics today. There's enough to do there. Focus on that. Do a good job there. Keep your hands out of everybody else's business and take care of yourself first. Take care of you. Take care of the problems that you can solve instead of just trying to create soapboxes to get yourself some more speaking engagements and events. So that's my thoughts. Just to wrap up, I'm not overly fearful of this drop. Everybody on Twitter will say, "I told you so." The price was going to drop. It was a bull trap yesterday. The news is what crushed us today. The Bank of England coming out was very much unexpected to many. Maybe it was a bull trap, and there were big buyers that pushed the price up and sold just before the news event hit. And then obviously they have inside tracks to the information on when news articles are getting released that are devastating like this. But that said, the market's still healthy. Bitcoin's still at $36,000. So take everything with a grain of salt. Don't get too scared of the market when it's reacting to news events. The market's going to act like a market. All the markets got hit. I personally don't think this is the start of the recession or the bubble popping. I think there's too many people calling for it for that to be the case. I think this is a news driven event, and my hope is that we can recover our trend line before the weekly close. So that's my position. That's my thoughts. I hope you enjoy the content of these videos. If you do, please like, subscribe. It would really help me out. I'm just getting started, and I really do enjoy creating these. So I hope they're beneficial to at least somebody out there. Until then, I hope you have a great rest of your Thursday. I hope you have an even better Friday, and I'll catch you in the next video. Until then, peace.